makers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. U.S. executives at a business summit in Beijing are rejigging their schedules after receiving an invite to a Wednesday meeting with the top Chinese leader, widely expected to be President Xi. Boeing starts a search for its next chief executive after a management overhaul as it seeks to reassure airlines and passengers that its planes are safe. Plus, our exclusive interview with one of the last hawks at the Bank of England, Catherine Mann, after she changed position and voted to hold rates at last week's meeting. Now, also on the show, another exclusive conversation. We speak to the new chief executive of Citigroup UK, Tiina Lee. Now, first thing is first, let's just look at what the markets are telling us. European markets, I guess, still trying to find a catalyst. That follows stocks in Asia a little bit mixed. Cautious trading, I think, is what we've seen since the start of the year. Traders, again, positioning ahead of that quarter end, and also the Federal Reserve's preferred inflation measure later this week. If we go on to cross-asset and some of the things that we're looking out for, so U.S. futures, again, pretty much unchanged. Offshore one also strengthening for a second day. This is after China's central bank reinforced its support for the currency. European stocks down. You can see NASDAQ, maybe a little bit of support. We did have a SPAC also of Trump media making Donald Trump a little bit richer, actually quite a lot richer in the last 24 hours. And then some of the other things we're watching out for is gold. Cocoa also at a record high, but gold prices, you can see there, 2,179. So actually close to a record high. Now, the Bank of England is widely expected to cut its benchmark interest rate at some point in the summer as inflation nears the 2% target and the UK economy emerges from a technical recession. Up until last month, two members of the Bank of England's Monetary Policy Committee were still voting for rates to go up, while Catherine Mann and Jonathan Haskell finally changed their stance this month, opting to hold rates. Well, I'm delighted to be joined now by Dr. Catherine Mann for an exclusive conversation. Dr. Mann, thank you for joining us. Now, as recently as February, you were still backing an increase in interest rates. Why did you change your vote?
Well, it's really good to be with you, Francine. Of course, I'm actually in chilly Belfast at the Royal Economic Society annual meetings hosted by Queen's University. But I'm glad to be with you at least online. So there are really three main reasons why I thought it was time to move from a rate hike in February to the hold from last week. And they really have to do with consumers disciplining the pricing behavior of firms. These are something I've been talking about for some time. The second one had to do with a changing dynamic in the labor market between labor demand on the part of firms and labor supply coming both from households wanting to add more hours and, of course, the fiscal package associated with the national insurance that was expected by the OBR to increase the number of full-time equivalent workers. And then number three has to do with the financial market curve. And at least on these first two, there was quite a bit of progress from February to March.
So the BOE's estimate, Dr. Mann, is that inflation will fall. You've been very concerned before about underlying inflationary pressures. What's your sense now about how worrying those pressures are?
Well, I've always talked about the differences between the deceleration in goods prices, which is something that we've seen happening on account of the change in energy prices, as well as changes in global goods prices. These translate into very close to zero inflation for goods in the UK market. Now, services, on the other hand, this is the area that has always been my concern, because even now, on a year-over-year basis, services are still running at 6%. So how have I changed my view? Well, when I look at the discretionary services, we're looking at hotels, restaurants, entertainment, travel. These, in the last couple of months, have really started to soften. And those are the most discretionary things in a consumer basket. So when those start to soften, it's because people have finally decided, I'm not going to pay that much. I'm not going to go to a restaurant that is charging me this much. And that discipline, that consumer discipline, is a very important ingredient when we think about firms choosing pricing strategies. Basically, firms have to respond to consumers saying, I'm not going to pay that much. And I do see that coming through on the data for these discretionary services. So that is why one of the key reasons why I decided that it was time to move to a hold. But the second reason, and I said it has to do with the labor market, 6 months ago, when we looked at the behavior of the labor market, talking to firms, using our agent network, and using our surveys for households, what we found is that households wanted to respond to the cost of living crisis by adding additional hours, maybe a second job. And firms were willing to go along with that 6 months ago. But where we are now is that firms actually are saying, because my wage bill is pretty high, what I want to do is cut hours, and I don't want to add more headcount. So there's a disconnect between what firms want and what households would like to have in terms of labor supply. And as I say, there's this additional aspect, which is the expectation based on the OBR of the implications of the fiscal package associated with the national insurance that is expected to add 200,000 full-time equivalent workers. So you have firms wanting less and households and the fiscal policy wanting more, and that disconnect in the labor market, I think, is something we will start to observe in wage dynamics very soon.
So given all of this, and even pre this, there's been a lot of betting that the BOE will soon switch to cutting interest rates. When do you think lower borrowing costs will be an option for you and for the BOE?
Well, I think we have to remember, Francine, that the only interest rate we set is bank rate, and that's very, very short term. The rest of the market curve is based on market expectations, based on competition among financial institutions, and there has been quite a bit of easing already, even from the March vote. In some sense, we can hold bank rate for quite some time, and the financial markets will already be easing on expectations of future cuts. My concern is that, and my fundamental reason why I voted to hike in February was, at that point, I thought that the financial markets had been easing too much relative to what I thought was the appropriate overall curve for the UK economy. I think that there has been a substantial easing even since the vote last week. And I think that perhaps markets are a bit too complacent about how long they think the BOE overall, the MPC, will hold rates. But of course, I can't speak for my colleagues. And we are going into a forecast round for May. And we'll see what how the data present themselves over the next few weeks.
And I want to get back to actually what the markets are expecting in a second, but we heard both from Andrew Bailey but also Hugh Pill saying that policy would remain restrictive even if rates were cut. Real rates are also rising as policy remains steady and inflation's falling. So how do you see those arguments?
Well, again, I think that we have to put this in the context of what the financial markets are doing with the nominal rates. Those are coming down substantially, as I say, even since last week. And so embedded in that is easing regardless of what we do with bank rate. So I think we really have to recognize that the policy instrument that we have is a very short-term instrument, and the rest of the curve has to do with competition between various financial institutions, if we think of mortgage rates, for example, and overall expectations of cuts going forward. Those are expectations based on markets. We know that markets sometimes get it right, sometimes they don't. We'll have to wait to see if they get it right this time.
But Dr. Mann, when you say markets are being too complacent, are they pricing in too many cuts or not enough?
I think they're pricing in too many cuts. That would be my personal view. So in some sense, I don't have to cut because the market already is. In terms of the implications of, the market curve is, and mortgage rates, for example, those are the rates that are faced by borrowers. Bank rate is not the rate that borrowers face.
But how many interest rate cuts do you think we'll see from the Bank of England this year?
Well, I really can't say. I mean, there's a lot of year left to go. So, the market's expectation is the one that a lot of people are betting money on it. So, you figure that if anybody has it right, they do. But, the degree to which the market curve has moved in the last week, but even more since the beginning of the year. We have 100 basis points of a swing in the market curve. And that suggests to me that there is uncertainty about in the market about exactly the conduct of the economy and the performance going forward. And that is the data are unfolding with regard to the degree of strength in the underlying economy, the degree of strength or deceleration in underlying inflation. And so I think there is quite a bit of play in terms of how the economy's performance is going forward. And that is one reason why we are seeing the degree of moving up and down of the curve. And we also, of course, have to recognize that the market curve in the UK is importantly affected by the market curves and the decisions of our two neighbors, two neighboring central banks and economies, Europe on the one hand and the United States on the other.
Yeah, traders are betting actually that Bank of England could beat European and U.S. peers in these interest rate cuts, and they're pricing in 3 cuts this year for the BOE. Does that look excessive, and actually how rapid could the pivot be towards lower rates?
Yeah. So when we look at the data comparing the deceleration in inflation and underlying wages for the U.S., the UK, and the Euro area, it's a presentation that we've had in the Monetary Policy Report over the last several issues. And we find that comparison to be particularly interesting and valuable when considering not only the conduct of the UK economy, but also the potential spillovers from monetary policy choices and decisions at our, both the Federal Reserve and the ECB. And one of the things that comes out of that comparison is that wage dynamics in the UK are stronger and more persistent than the wage dynamics in either the United States or the Euro area. And underlying services dynamics are also stickier, more persistent than either the US or the Euro area. So on that basis, it's hard to argue that the BOE would be ahead of the other 2 regions, particularly the United States.
Right. Catherine Mann, the former Fed chair, Ben Bernanke, is, of course, doing this review of BOE forecasting and communication methods in response to criticism that the BOE missed a jump on inflation. What do you think should be done to improve the process at the BOE?
So the Bernanke report will be coming out at some point, and it will be very interesting to see the overall reaction to it outside. There are a lot of different elements of the forecast process. What I think is an important part of the process, especially over the last 2 years, when the economy has been hit by multiple shocks, is an understanding of how asymmetric processes work in the economy, how nonlinearities work in the economy. And many of the models that we use, and I've been on the model building side at numerous of my other jobs, most models simply tend to be linear and symmetric. That's just the way they work. They're big, they have a lot of interactions, they tend to be constructed to be linear and symmetric. That doesn't mean you can't bolt on important research that helps you understand how firms react in a nonlinear situation or an asymmetric situation. And I think thinking seriously about how to integrate partial equilibrium or firm level analysis, or how consumers react, or how deciles, different income deciles, those behaviors are different, how to incorporate that disaggregation into a macroeconomic setting. That's something that I think is worthy of more analysis within our own forecasting process.
Okay. Have you spoken to Ben Bernanke, and do you think the BOE should do dot plots like the Fed?
Well, yeah, Bernanke did quite a bit of research, speaking with many people, both within the bank as well as outside, at all levels, staff all the way up to the top. So he had a very comprehensive interview set in order to understand the background of the overall process. On dot plots, I think we do better than dot plots. We tell you exactly how we vote, and we give speeches and interviews to tell you why. So we give you a lot more information than a dot plot.
Thank you so much. Catherine Mann, always a pleasure to speak to you, Bank of England MPC member, joining us for this exclusive interview from Belfast. Now, coming up, Fed speakers Bostic and Goolsbee differ on rate cut expectations as investors await the release of key U.S. data later this week. We'll discuss the path forward for U.S. rates. That's coming up shortly, and this is Bloomberg. Well, Fed Governor Lisa Cook says the U.S. Central Bank must be cautious in cutting interest rates. Policymakers held at their meeting last week and maintained their forecast for 3 cuts this year. Now I'm now joined by David Powell from Bloomberg Economics. David, you put it all together for us in language that makes sense. If you have the 3 major central banks, so you leave the BOJ to one side, where's the ECB right now? Are they waiting for wage negotiations?
Yeah, the ECB has been pretty clear what they're focused on before they begin cutting, and that is wage growth. And we get that new data, the most comprehensive set of it, along with the national accounts, which will come in early June, in time for the ECB to announce a first cut in June. And Lagarde gave us a pretty clear roadmap of what happens after the first rate cut just last week in Frankfurt. And essentially, they're going to be continuing to focus on wage growth and profit margins to determine if further cuts can come after that first one.
So, David, I know Bloomberg Economics is always ahead of the curve. What happens that you cut, and then what happens for the ECB?
Well, essentially, the ECB is then going to be needing a bit more data. They've been very clear, we're going to cut in June, but as Lagarde said, after that, we're going to need to look at a few more things. So they'll probably be cutting more later in the year, although that may not all come immediately. It may be backloaded towards the back of the year.
Okay, David, as always, thank you so much to you and your team for some pretty great analysis. David Powell of Bloomberg Economics. Now, coming up, Boeing starts a search for its next chief executive after leadership overhaul. We'll cover that story next, and this is Bloomberg. Well, the conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, a sweeping leadership overhaul at Boeing with Chief Executive Dave Calhoun stepping down at the end of the year. Commercial Planes Chief Stan Deal is also leaving immediately, while Chairman Larry Keller will not be standing for re-election. Now, for more on all of this, let's bring in our Bloomberg senior global aviation reporter, Sid Phillips. So, Sid, what triggered the move, I guess, is almost years of complexities and scandals, frankly. Why has it taken them so long?
So it's been a sort of, ever since January, that's when the latest sort of crisis at Boeing began, when a door plug fell off the Alaska airplane 737 MAX. And that's really been the sort of latest trigger for all this sort of soul searching, as Boeing has been under pressure from regulators, consumers, and customers. Essentially, the airlines are sort of really furious about Boeing's quality lapses, as well as how they can get airplane deliveries, because the regulators have come down hard on Boeing, and that's sort of restricted their ability to deliver new planes in terms of being able to ramp up production and everything else. And that's really been a massive trigger. And so the latest incident came up when the CEOs of the 3 largest carriers in the US, Southwest, United, and American Airlines, sought meetings with the board of directors independent of Dave Calhoun. And that was really the trigger that sort of spurred this management change at Boeing.
So, Sid, where does Boeing go from here?
So the new CEO has to decide what the strategic priorities are for the company and how they can sort of address the laundry list of problems that Boeing has, as well as being able to chart a course for Boeing's future. Because essentially for the aviation industry at the moment, it's at a cusp of moving to new technology and moving to greener and cleaner aircraft. And Boeing really needs to deliver on building a whole brand new narrow-body aircraft that will serve the next generation. And that's really a key for the new CEO to basically come up with a new program at the same time as addressing the current issues that Boeing has, including solving out its supplier issues, its quality lapses, certification of the 737 MAX, the 7 and the 10, which are still not certified, as well as the 777X that's been 5 years delayed already.
Sid, thank you so much. Terrific briefing, as always, from our senior global aviation reporter, Sid Phillip. Now, in the meantime, former President Donald Trump's social media startup is rising ahead of its first session as a publicly traded company after the most high-profile blank check deal in years, gaining 18% pre-market. Now, the deal basically gives the parent company of Truth Social more than $275 million of much-needed capital. This is Bloomberg. Now, U.S. executives at a business summit in Beijing are rejigging their schedules after receiving an invitation on Wednesday at a meeting with the top Chinese leader widely expected to be President Xi. Boeing starts a search for its next chief executive after a management overhaul as it seeks to reassure airlines and passengers that its planes are safe. Plus, in just a moment, our exclusive conversation with the new chief executive of Citi UK, Tiina Lee. Now, good morning, everyone. Welcome to the Pulse. I'm losing my voice because it's been a heavy week news in terms of news flows. Now, U.S. futures, for the moment, really trying to find some kind of catalyst. If you look at cross assets, I know a lot of the focus will also be on cocoa. S&P futures, you can see gaining some 0.3%. And then stocks Europe 600, pretty much unchanged. Now, as part of Citigroup's biggest restructuring in 2 decades, the U.S. bank has appointed a new lead for its UK operations. My next guest, Tiina Lee, is now the chief executive of Citi UK. She also serves as the chief executive of Citigroup Global Markets, the bank's UK-based entity that houses its markets and investment banking business. Well, Tiina joins us to take a look at how her first 6 months in the role has gone. Tiina, thank you so much, actually, for joining us. I mean, you have a big new job in one of the most exciting and difficult, I imagine, restructuring for Wall Street Bank. How does the UK fit in all of this?
The UK is at the heart of Citi's global operations. So for me, it's really a fantastic opportunity to come and look at what is an amazing franchise in the UK already and how it plugs into our global network. You know, no one does global like Citi, and therefore really the opportunity here in the UK is going to be quite unique. As you said, you know, we've just concluded actually the most significant management reorganisation for a number of years. That is now over, which is great, which means that now we can do what we're really good at, which is executing on our strategy and, most importantly, delivering for our clients.
So what does that look like, Tiina? Is it hiring? Do you see a pipeline in M&A and IPOs?
So 2 things. Absolutely, there's an opportunity. We have a fantastic franchise already, but I'm ambitious and we can clearly do more. So as part of my new role, I'm responsible for not only investment banking, but also the corporate bank and the commercial bank. So what that means is, of course, we will be looking to hire strategically, particularly in some of the fast-growing areas, such as our commercial banking franchise, where I believe we have a real sweet spot in supporting fast-growing mid-cap companies in the UK, particularly when they decide to go global into the US and into Asia. And Citi, I think, has a real sweet spot in that area. But as you said, we've actually got a very positive backdrop in terms of markets, in terms of tone. And of course, we've seen debt capital markets on fire since the beginning of the year. We've seen the refinancing of some leveraged finance transactions. And of course, what we have seen with global equity markets has meant that actually the mood music across ECM and M&A has been the most positive than we have seen for a number of quarters.
So do you see 2024 as a good year, or a better year certainly than what we saw in 2023?
Absolutely. I mean, I think when one looks across at the activity now, we always know that the road from pipeline through to execution can be long. But certainly when we speak to clients and when I engage with clients, they're way more positive than they have been in recent quarters. So it's really about taking those opportunities as they come. You know, we have to be selective with regard to the right deals at the right time, but markets are open and there's plenty of opportunity.
And do you think London is back? I know there's a lot of questions about whether Shine should IPO here because of some of the questions surrounding ethics?
Look, London is still a powerhouse for financial services. That's not going to change. So there's, of course, been an enormous amount of focus in terms of all the structural reform that has taken place over the last few years. We need to just deliver on that. And that's really the key message for government, for regulators. There's been a lot of steps that have been taken. Alongside City, execution now is key.
But again, so how would you do that? There's Mansion House, there's a number of reforms, but also in trying, there's the British ISA, which we're not sure what happens at the next election to it. What do you think would really kickstart UK PLC and therefore the UK banking sector?
So, look, there's no silver bullet. Really what this is about is cumulative structural reform, which has begun. So this is like turning around an oil tanker in the UK. We're not going to necessarily see immediate impacts over the next 12 months, but I firmly believe that over the next 5 to 10 years, we're going to look back and say that actually what this government has done, what regulators have done, what the stock exchange has done with regard to reforming listing rules and the sponsor regime actually will go to make the UK a far more competitive place to do business and to allow long-term investment decisions for our corporate clients.
Tiina, there's always this battle between Canary Wharf and the City of London in the battle for financial services or attracting even lawyers. I know you're kind of on the Dockland camp now. Do you think it will win over the square mile?
I don't think it's a zero-sum game. I think winners, at the end of the day, London is the winner. In having these two fantastic financial services centres. You will know that in terms of Canary Wharf, we've already made a long-term commitment. We're in the middle of a major financial commitment in refurbing City Tower. That's going to be concluded in 2026, so we will have, once again, the iconic building at the heart of Canary Wharf. So we're not going anywhere. I think what is really encouraging is actually all the work that Canary Wharf, under Shobi's leadership, has done with regard to actually regenerating the whole estate, making it more mixed use. It's great for our work colleagues to be able to go out and actually take some time outside of the office, as well as providing a great working environment. So we're very happy.
When you travelled, Tiina, in the UK, what do your regional managers say they need from you or from the government? Again, it's election year, and so there's a lot of question marks on how Labour, if they were to come into power, deal with financial services as a priority.
So I've been really encouraged by, whether it is the current government or any potential future government, what the key message has been is how do we create a stable and predictable environment for our clients. So City is politically agnostic. We obviously care about the future of financial services and we care about the future of the UK economy. But actually, I've been very encouraged by both sides of the House being very open to how we can make the UK more competitive. For City, we have 4,000 people in Belfast in Northern Ireland. So for us, it's not just a London story. Actually, how we can develop the nations and regions, for us, Northern Ireland and Belfast is really our key site, but actually being able to create high-value financial services jobs for people in their local communities is also really important.
Are you expecting to start hiring again?
We're hiring selectively. So, for example, in our commercial banking business, not only are we looking to make strategic hires, but we're also looking to acquire new clients. So that's an area that I'm very excited about. So, we're not going out and hiring lots and lots of people, but we will be strategic about it.
Tiina, what makes you most worried about the next 14 to 16 months? I mean, half the people we speak to say actually the UK could be a beacon of stability because of all the geopolitics and everything that's going on in the world. Others saying actually no matter what happens, the UK will be taken with these volatile markets as they don't really know where to look.
Well, I think actually the economic backdrop is looking positive. When one thinks about the outlook for inflation, we've already started to see some dovish comments a little bit earlier from Catherine, but also really from the Fed and from Governor Bailey last week. So I think the tone in the market is going to improve. Clearly in terms of growth, I think there needs to be more focus around growth and around productivity. But certainly I think as we think about the end of the year and beyond, we'll start to see growth actually build up in the UK, and I think that will be good.
And do you see it with your clients that they're ready, the chief executive, the small and medium-sized companies that you were talking about, that they're ready maybe to spend more or invest?
They're all very keen to invest. I think the challenge is, how do we ensure that they invest here in the UK? Many of our clients are global. Or we have clients that are UK-based that are looking outwards. And again, that's an area where Citi can really help. We have a global network that's second to none. We're in 96 different countries. We have an incredible network. So how do we help support UK PLC do business around the globe?
And is there appetite actually for traveling? And is this outside the EU? Are you seeing patterns on where some of these business leaders want to invest in?
That's right, we are. And certainly one of the areas that I'm going to be focused on is how we can do more business in North America with our clients, but also certain trade routes. So whether that be into the Middle East, whether that be into India, into China. So there are lots of areas of activity that we're going to be focused on in terms of how we can do that international business for our UK clients.
I know in the past you've been very focused on diversity, ESG. That seems to be taking a little bit of a step back. Is it just in 2024 something that does take a step back and then comes back to the forefront, or do you still see it permeating in some of your conversations with clients?
It's still front and centre in terms of our conversations. We know that transition plans are going to take a long time. We're talking about 20 to 25 years. So actually what we're focused on is making sure that we can continue to advise clients on how they can transition to net zero. It's not just about 24, it's beyond. So we can play a key role in helping those clients transition, whether it be old economy clients or, of course, those clients that are based upon emerging industries, clean energy, renewables, that will actually be the future of the economy.
Tiina, thank you so much for joining us today. That was Tiina Lee, of course, the Chief Executive of Citigroup UK. Now, coming up, the Chinese automaker BYD sets its sights on Toyota and VW, having already unseated Tesla as the world's top-selling EV maker. We'll tell you how next, and this is Bloomberg. The conversations that matter, the insights you need. This is The Pulse. I'm Francine Lacqua here in London. So you're looking at live pictures of the Francis Scott Key Bridge in Baltimore. Now, authorities there are searching the water for at least 7 people after a number of vehicles fell into the water. The bridge was hit by a large ship. Now, Baltimore Fire Department has described it as a developing mass casualty event with retainers hanging from the bridge, making conditions for emergency responders unsafe and unstable. We'll, of course, continue to update you on the story through the day as we get more details. Now on to other news. And the Chinese automaker BYD has set its sights on luring customers away from Toyota and Volkswagen, having already unseated Tesla as the world's top-selling electric car maker. Well, BYD has cut the cost of almost all of its electric and hybrid models, with its Seagull hatchback now selling for less than $10,000. It's due to report full-year earnings today. Now let's bring our Bloomberg Global Automotive Editor, Craig Trudell. Craig, yesterday we're talking about CLAT. What can we actually expect from BYD? And good morning.
Good morning. Yes, it's going to be an interesting set of numbers. We got an indication of what to expect at the end of January when the company reported preliminary figures. And what we've seen is this trend of, quarter by quarter, an increase in deliveries for BYD. And yet, net income, it went from, gradually rising throughout the year to in the fourth quarter on a preliminary basis took a step back. And it's pretty clear what's going on here. The amount of price competition in the China market is so intense, with BYD really sort of leading the charge from this perspective, that's actually starting to have an effect on their bottom line. They are still a profitable company. They're still much healthier than a lot of the other players in that market. But even they felt the effects of this in the fourth quarter.
But how can they offer discounts?
They are not only just an EV maker, but a battery maker as well. So they make some of the batteries that go into their EVs. The fact that lithium and nickel have come down as much absolutely gives them the ability to bring some price down and not necessarily take it all on in terms of the amount of discounting hurting them. That being said, they are still feeling the effects of it. I think what sort of brings together what BYD and CATL are doing here is really viewing this as a survival of the fittest putting market forces on some of the weaker competition within that market, because as much consolidation as we've seen the last few years, there's a long way to go. There are a lot of players still left in China.
Craig, thank you so much. I know we'll talk more and more about this. Craig Trudell there. Our carts are. Now, here's what we're watching out for today. At 12:30 p.m. UK time, U.S. durable goods. 2 p.m. London time, U.S. Conference Board consumer confidence. And then at 5 p.m. UK time, we also have a U.S. 5-year note auction of $67 billion. Then also later, we have the Bao Forum for Asia beginning in Asia and the Nigeria rate decision. Now on to geopolitics, and the Israeli government has called off a trip to the U.S. by senior officials. That's after Washington decided not to veto a UN resolution demanding an immediate ceasefire in Gaza, a decision reflecting a shift of approach by Washington. Well, Bloomberg's EMEA News Director, Rosalind Matheson, is with us. Ros, thank you for joining us. Israel clearly not happy, but does it make us closer to a real ceasefire, or is just Israel and the U.S. fighting?
Well, at the moment, it's just really the US and Israel arguing. What we do know may still happen is a meeting of the defense ministers of the US and Israel. But we're also hearing is that the latest talks in the Middle East have broken down yet again, that those delegations between Israel and Hamas that were aiming to get towards the parameters of a ceasefire have yet again fallen apart. So at the moment, they're still arguing over the terms of what would be the pre-terms for the terms of a ceasefire. So we're nowhere closer to getting that, despite weeks and weeks of talks and, facilitation by Qatar, Egypt, the US and others to try and get that ceasefire. So above all, in all this arguing, what we know is that the fighting is going on between Israel and Hamas, that the Israeli government is adamant that they see the need at some point to go into Rafah to clear out the remnants of Hamas. Everyone's concerned outside Israel about the ramifications of that for the people who are inside Gaza, but we're no closer to the idea of what we might get in terms of a ceasefire. And so time is running out in that regard.
But would the U.S., given what they did at the UN Security Council yesterday, would the U.S. go much harder? Actually, would they even go as far as, stopping giving money to Israel to make sure that there's a ceasefire?
Well, that is the real question. Like, what else can the US do, or what are they willing to do, again, against a country which is a key ally of theirs, both economically and strategically? And a really big move, unprecedented to say we're not going to send Israel weapons, for example. We're going to stop military or other financial aid. You can see the reluctance really to do that. They're trying to use all their powers of persuasion unsuccessfully so far, because it is a very delicate thing for the US administration and for Joe Biden, the president. How far can he push Israel, and what kind of actions can he take without risking really some blowback for himself at home?
Ross, there are a number of stories. So Emmanuel Macron is also traveling to Brazil. Is that to try and get support for Ukraine?
It's really interesting to see Emmanuel Macron at the moment, because, of course, he's releasing different things. He's released footage of his phone call, very stern, with the Russian president right before Vladimir Putin went into Ukraine. He's lecturing the Israeli administration, Benjamin Netanyahu, saying that, going into Rafah could constitute a war crime. He's releasing pictures of himself in boxing garb, looking very, very, masculine. And now he's off in Brazil, seeking, it seems, to persuade Brazil as part of the Global South to take a more overt stance about the war in Ukraine and supporting Ukraine. He's really kind of setting himself up here as a bit of the de facto leader of Europe at the moment, and perhaps a parallel operation with Brussels, but sensing a bit of a vacuum, potentially, is saying, I'm the one who's going to be trying setting the foreign policy agenda for Europe, warning about the possibility that Vladimir Putin might go further than Ukraine, warning of the need to really build their own self-reliance when it comes to defence, and setting out his stall in all these interesting ways. So certainly it's a reflection of that.
But are people listening to him, or is he taking on that position without much sway, really?
Well, there's a lot of concern in some parts of Europe over his recent comments, which hinted that he thought that Europe might have to be open to sending troops into Ukraine. There was a lot of blowback about that within Europe, a lot of concern, particularly in places like Germany. So it's not as though that everyone's sort of supporting this self-appointed mantle that he's seeing, but obviously he says that someone needs to enunciate some policies on behalf of Europe. But the question is, does that divide Europe a bit as a result?
Ross, so we talk about the U.S. and China being at loggerheads almost every day, but then we had the story today about U.S. chief executives being asked to meet a senior Chinese official, so staying on from their trip in China, and we think they're going to meet President Xi. What does that tell us?
Well, it's interesting because he also did something similar in the US around APEC, where he met with senior US executives, and we're expecting that he will do the same tomorrow in China, and many of them are staying on just for that. They want to have that audience with the Chinese president. And it's interesting, it's direct outreach from Xi Jinping to these US executives, again, to sort of contain that message, really, that China is still open for business, still wants to do business with the US in particular. And that's because Xi Jinping has a self-interest in that. He needs his economy on a better footing. There are substantial structural problems at home for the Chinese economy. He knows, even though there are those tensions over trade with the US, over technology, fundamentally they're bound together economically and they need each other for their own economic success. And even he recognises that. So perhaps a bit of messaging on his behalf to these US executives. We're still a climate where you can be encouraged to come and do your business.
So interesting. Ross, thank you so much, as always, for a terrific roundup of some of the things going on around the world. Our Bloomberg MEA News Director, Rosalind Matheson. Now, coming up, the single greatest day for Donald Trump's wealth. How the former U.S. president's net worth has ballooned to $6.5 billion. We'll bring you the details next. And this is Bloomberg. Well, 24 hours ago, all eyes were on whether New York State would begin seizing Donald Trump's assets as a deadline passed to post a bond of around $500 million. Now, overnight, the former U.S. president's wealth has ballooned to $6.5 billion. This, as the bond he needs to pay, was cut to $175 million. Well, let's get the details from Bloomberg's Charlie Wells. I mean, it's an incredible comeback. So what impact will yesterday's decision actually to reduce Trump's bond have on his wealth?
Yeah, I mean, it was a very Trump day, right? You got the sense that there was peril in the morning, and then he ends up on the Bloomberg Billionaires Index at the end of the day. And I mean, the issue with the bond was like very much a cash crunch. So that was more cash than Trump said that he had on hand. And the concern in Trump world was that he might actually have to start selling assets at potentially to low prices. Attorney General Letitia James had indicated that she may be willing to seize assets. This was a complete reversal of that. He said that he is going to be able to post that $175 million.
So pre-market, we've seen that the Trump social media firm actually gaining quite significantly. Is there momentum behind this trade?
It seems like there is. So, this has been a 29-month process of this merger. It almost reminds me of, SPAC mania back in the day. And this is kind of Trump media merging with a blank check company. Mm-hmm. Shares, of that blank check company were up 35% yesterday. They're up about 20% this morning. And it's very much an attention economy play. It's very much tied to Trump's, attempt to regain the White House. But look, this is a company that has really struggled with profitability. They lost $49 million in the 9 months through September. Revenue of, about just north of $3 million. So really struggling there. It's very much about momentum.
Thank you so much for the terrific briefing, Charlie Wells, there with the very latest on Trump Media and Technology Group pre-market. You can see almost up 20%. Now, you're looking at live pictures of the Francis Scott Key Bridge in Baltimore, which collapsed after being hit by a container ship. Rescuers are searching the water after a number of vehicles fell in. The Maryland Transportation Authority has issued an alert on X telling drivers not to use Interstate 69. The disaster severs a key link on the major highway encircling Baltimore. We'll completely, of course, bring you all the latest on this as well.